Hey guys, this is Sandy. I'm a licensed realtor here in the Central Florida area. And today I want to do a video for you on how to build your dream custom home without actually breaking the bank. We know we're in May 2025. That's the time of the video, May 19th to be exact. I can't believe the year is flying off so fast. And we are in a market where interest rates are kind of high. People are on the sidelines. People are saying we may go into a recession, we may not. There's a whole lot of uproar in the political environment and a lot of uncertainties. And people are wondering, well, should I really even be buying a home or not? If I was to buy a home, do I want new construction or resale, or do I want to build my home? A lot of people in our area, I'm in Central Florida, they are getting tired of the HOAs. A lot of the more desirable homes are in these HOA communities, homeowners association, and they have their rules and restrictions. So some people are thinking out of the box. So this video is going to be about what happens if I don't want to do the norm. I want to think out of the box. Well, what does that look like, Sandy? What are you talking about? So thinking out of the box is where you either already have land and you want to build your home on the land, or you want to go buy some land and build your home on that land. So you're not going to go to a resale. You're not going to go to a regular builder like the big name Lennar, Meritage Homes, all those big builders. You want to get your own little land, and I've gotten many phone calls on this, guys. It's becoming more and more popular. So either you already have the land and you want to build on the land, or you want to go buy the land. How do we do this? And this is not a popular topic. So we have a way of helping you to do that, and we're going to explore that. So whether you have the land already, or if you're going to purchase the land, there are builders that we work with that will customize your home for you. Either they have their own plans, or you could give them your plans, or work alongside them to create the plan. They also have lots sometimes. So sometimes you're like, oh, I can't find the land. They're like, hey, we have these lots available for you to build your custom home on. What do you want? So here is what some people are doing. In our area, multifamily is not very popular, right? Some builders are now building where they build an in-law suite, but that's not very popular. So these builders are able to build a 2-family or a 4-family for you, or a home with a studio, so that you could rent a part of it and they'll help you pay your rent. And guess what? It's not inferior to superior. They're building, if you're doing a duplex, they're building 2 exact duplex. So they're building, let's say, a 3-bedroom, 2-bath duplex side by side, single story, each of them having a 2-car garage. Each of them with their own driveway. Some will have a shared driveway based upon the land they're working with. And that way you could live in one and you could rent the other out. Same thing with the duplex. They're connecting 4 different units. They could be exactly the same. You could say, you know what? I want my unit to be 2,000 square feet, and you could build the other 3 at 1,300 square feet. Whatever you want to do, it's customizable. They have floor plans they could show you. They have homes they already built that you could look at to see what you want to do. Now, obviously, location. The closer the location to Orlando, the more expensive the bill would be, the more expensive the land would be. The further away out you go, or the more rural you go, the cheaper the land will be. So you have to decide which way you want to go. Now, you don't have to build a duplex. You don't have to build a 4-unit. You could also build a regular home for yourself. You could build 4-bedroom, 3-bath, 5-bedroom, whatever you want to do. If you have your own land, now let's talk about how we're going to finance this. If you have your own land and it's going to be a primary resident, you could use the land as down payment. And the bank is going to go out there via the land, use it as a down payment, so you're able to build the home. If you're building a primary residence, and you already have the land, or you're going to go buy the land, you could either buy the land from the builder, or you could buy your own land, and then you could go to the bank and they could still use the land as a down payment. You could still do a regular FHA 3.5% down. You could still do a regular VA with no money down and still get the land and build your home on it. The bank does what we call a pre-construction loan. So when the builders start to build out, it's going to be a pre-construction loan. So they're going to give you the money to build out, and then you pay money on the interest as it builds out. So for an example, let's say you need $300,000 to build this house. The bank is going to pay it out in increments to the builder. So they might give them $30,000 at first, but the builder has to first do the work. So the builder do their prep work, their impact fees are going to be included. They lay down the foundation. They say, okay, bank, this is what's done. We cleared the lot. We did all our preliminary work, and we have the foundation laid. We need a $30,000 draw. They're going to give them $30,000. Once they give them that $30,000, you're going to start to pay interest on that $30,000. Then comes the next stage. Let's say they do some more work. I don't want to bore you with all the different work, but they do some more work. They want 10 more percent. Now you're at 60,000, so you're going to pay interest on the 60,000 only. At the end, when the house is completely built, most banks will convert that to a permanent loan. So it becomes a permanent 30-year fix. At that point, you could just convert whatever the amount is that was used to build into a permanent loan. Or you could do a refi where you're like, you know what? The builder built the home for $350,000 all in. The home is really worth $450,000. I want to pull $50,000 out. You could do that once it goes into the permanent loan. This is for primary residence as well. Let's say you want to build a home. You want to build a 4-family home. You want to build it, but you want it for investment purposes only. That's a whole different ball game. At that point, you'd need 30% down. So you need 30% down. They'll still build a 4-family for you, and it becomes at the end of the build, you could then convert it into a DSCR loan. A DSCR loan is where you're borrowing based upon the potential of the property. So as long as your mortgage monthly payment is lower than what the rental income is, then it's no documentation check. So they're saying you build a 4-plex, you're going to rent it for $1,500 per unit, which would be $6,000. Your PITI, so your principal, interest, taxes, and insurance is, let's say, so we have $1,500, so we have $6,000. Let's say it's like $5,000. Let's say it's $5,500. Then the property will qualify for you to roll into a DSCR. So you could do a regular custom home for yourself. You could do a duplex for yourself. You could also do a 4-family and live in 1 unit, and that's all primary residence, or you could do it as an investment. For primary residence, you could do it as any other primary resident home. You could do a FHA, you could do a VA, you could do 10%, 20% down based upon what you're qualified for. So they're going to look at what you're qualified for the primary resident, and you decide if you want your own custom single family home, or you're like, you know what, things are hard. I'm going to build a 2-family. That way I could live on one side and I could rent the other side out. Or you want to be adventurous like me and you're like, you know what, guess what? Remember guys, up to a 4-family is still considered residential. So I want to do a 4-family home. I'm going to live in 1 and I'm going to rent all 3 out. That's all primary residence. You could do a 4-family. As a matter of fact, if you're a Robert Kiyosaki fan, which I am or was, Rich Dad Poor Dad, that's what he'll tell you. Like, he will say your first purchase should be a 4-family home, live in one, rent the other 3 out. You could build this, right? Now, some things are going to come into consideration. Here are a few of them. If you're building a 4-family, is it going to plug into city water and city septic, or do you need a well and a city water and city sewage, or do you need to build a well and septic system? If you need to build a well and septic system and you are going to do four duplexes, you need to have enough land for them to build the size of the septic and the well to cover all 4 units. If you're plugging in the city water and sewage, that doesn't become a real problem. You just have to tell the city that, and they have to also work out the preliminaries as to what size water line and sewage line you'd need coming into the property to do all that great stuff. So those are things to consider. There are some areas now, because a lot of people are trying to get away from more of the city areas because they're trying to pay less. So if you go more rural out, you're able to find land. Now, here's how this works. If you found the land, you're going to call us up and you'll let us know, hey, we found land. Our builder will do the preliminary work. So they want to see where the land is, what is it currently zoned for, can we actually build what we want to build on it. They're going to do all that preliminary work. Once they finish doing the preliminary work, they're going to come back to you and say, hey, here's your options. If it's already zoned for multifamily, perfect. And you want to do a multifamily, perfect. If it's zoned for single family and you want to do a single family, perfect. But let's say it's zoned for single family, but you really want to do a duplex because you want to live on one side, you want to rent the other side out. For that particular situation, we may have to go to the town to change the variance of the zoning. We got to change the zoning. Will the town allow me to build a duplex even though it's zoned for a single family? We got to figure that out. So these are some preliminary work that will be done by the builder. The builders have years of experience. They've been doing this for a long time. They could tell you really quickly if the land you're looking to buy can do a duplex, a quad, a 4-family. What square footage home can you go maximum on? If it needs septic and well, what would that look like? What size? What the price is? All that great stuff. So these are things you gotta look into. Obviously, it's better if we're able to tie in the city water and sewage, but that doesn't mean because we have to do a septic and a well means it's not a great idea to do. So if you're thinking of building a custom home or ever had the idea of doing one, you could do so. You could build your own custom home on your own land, or you could do a duplex or a 4-family or whatever it is you want to do. You could even buy the land, do a 4-family and do Airbnb. You could buy the land, do a 2-family and do Airbnb. So you're Airbnb out 2 sides. Most people are doing this because they want to go out of the HOA. So most of the time when you're doing this, it would naturally be zoned for short-term renting because you're not in an HOA. HOA sometimes is what restrict what you can and cannot do with the home, not necessarily the city. But these are things we also find out up front before we put any money towards the project. So if you have the land already, great. You could use this as a down payment. This is only for primary, by the way. If it is investment purposes, or maybe you're going to build and sell it. Maybe you're going to get the land, you're going to build a house, you're going to flip it. You could do that too. But if you're going to do that, you need 30% up front. If it's any kind of investment, whether it be buy and sell it back or buy and rent it, 30% down. If you are buying it to be a primary resident on the units or unit, then you could do the regular primary resident situation where 3.5% down, no money down. If it's zone USDA, guys, check this out. If you found the land that was zone USDA and you're going to build there, and you qualify for a USDA loan, that's also no money down. And you could either build a single family home, a duplex, or 4-family, live in one, rent the others. A lot of people are going that route, especially if you're a millennial or if you're starting out and you don't have all that money, you don't want to pay a big mortgage. A duplex or a 4-family would be a great way to go. But either way, you could do it. You could build your own home on your own land. You could do it. What's the cost? Depends. I would say the cost, the last time I checked, the land is a different story, right? So the cost to build itself is going to be anywhere in the 300s, moving upwards to build it based upon what you're building. They have this unique situation where you could build a home and build a studio or a one-bedroom apartment on that home. So you live in the bigger side, which could be a 3 or 4-bedroom side, and you could have a 1-bedroom where you could rent out as well. Or maybe you're an empty nester. Maybe you live in the 1-bedroom and rent the bigger side out. Guys, there is a lot of opportunities here. So if you have any questions or want to know more about this, give us a call, send us a text. The number should be somewhere up here, or comment down below and we will respond to you. But if you're looking to build your custom home on your own land or buying the land and building a home, that's a great way to do it. Again, you could also buy the land and build whatever you want, whether it be your own single custom home or a duplex or a quadruplet, which is 4-family. You could do it. You could do it primary. You could do it investment wise. The possibilities are endless. You could get out of the HOA thing. I know Ocala is a great area. Now, a lot of people are going towards Ocala. I'm not saying for you to do this, but the cheaper land is the more rural you get. So as you get further rural out, the more you will get for your money. Lakeland, there's areas in Lakeland, Claremont, Leesburg, St. Clouds. St. Clouds is getting kind of pricey. So the more rural you get into St. Clouds, which means the more you are going towards Melbourne, is the better land. No, I'm not saying you can't buy land closer in. I'm just saying the cost of the land will be more expensive the more you are centrally. The more rural you go, the more buck you'll get for your money. And that's the case in all circumstances. Thank you so much for listening. Again, if you have any questions or you have any kind of inclination of doing this, give us a call, send us a text. We will help you acquire the land. You could use the land the builder already have, or acquire land, or if you already have land, you could do it too. Maybe you live in a house and you own the land right next to the house. You could build on that land as well. So I'm looking to hear from you. And remember, share our videos and like it so we can reach more people, and click on the little notification bell so you'll be notified every time we put a new video out. Because we are helping you building real estate wealth. Yeah. All right. See you on the next video, guys.